Welcome, everybody, to Calmness in Chaos. This is a pilot episode of a new podcast where we hope to try to make some sense of all the chaos in the markets, talk about some unusual option activity, provide some education in market psychology, and whatever else we feel like talking about. My name is Joe Fahmy, alongside my super awesome co-host, Mel Stone. Mel, thanks for agreeing to do this with me. So appreciate
Thanks.
that.
Yeah, thanks for having me. I think we've done so many spaces together and really have a synergy on kind of what we look at, how to utilize options. So that's more of what drives me to some of the charts versus kind of your approach, which you have chart setups that you look and kind of look for confluence. So love being able to share some information. I think especially as we go into this new year, there's going to be some great opportunities, and often you'll see that pop up prior to some moves. So at least you have some knowledge where there's some money rotating, where you have maybe some exiting of a position, some put activity that would lead to maybe some possible rotation somewhere else. So love being able to be a resource, pick those things out, and kind of help find where we can potentially all look to make some money.
Awesome. I think for the viewers, a lot of people know who you are and have followed us and so forth, but maybe a quick introduction. I mean, I can just keep it quick. Again, my name is Joe Fahmy. I manage money with a firm called Zor Capital. I've been trading about 25 years or so. A little bit of fundamental, a little bit of technical. I have an educational program as well that I do. But for the most part, I try to combine technicals, fundamentals, some unusual option activity, seasonality to try to do everything I can to help our probabilities of success. So I just wanted to do a quick intro. Mel, if you want to tell them
Sure.
a little bit about
Yep.
yourself.
So I've been trading for 6 years, and when I first started, I think I was so over and bombarded with every indicator under the sun, not even knowing what they were supposed to do. And then everybody just kept saying, follow price action, price and volume, institutions run the market. And I finally just took everything off, and it kind of led me down this rabbit hole, looking at dark pool activity as well as options flow, and started with black box stocks about 4 years ago. So I'm a moderator with that team, and just through sitting and looking and really being able to just spend time in the seat, I've really picked up an eye for what to spot that's unusual, or maybe what you think you should be seeing right now that you're not seeing. So I like to be able to kind of be somebody and a resource that can tie and put all the pieces of the puzzle together.
Yeah, do you think the intensity of watching everything and being on top of things, because I don't think it's really the time in the market. I know some people have been trading longer than I have, and they still have a lot of struggles. And I know some people have been trading a couple of years that are amazing. Do you think the intensity of watching the tape and being on top of things has really sped up your learning curve?
Absolutely. So, I know that you're somebody who's probably going to be screening all day. Where's the volume at? What's moving? What's breaking out? I know you're somebody who has alerts. I look at just what's coming in, and it's a very intense tape when you look at how much comes in the options market. So, of course, I still have my faves, some setups, my technical setups, and I'll still look there. But really, I'm using what's coming in first as my first guide, my first step to kind of go, okay, now go look at that chart, because I want to be where there is money positioning. I've done that before, where I've like MACD turned up, we kind of moved, and then we just no movement, and I am primarily an options trader. So I just feel more comfortable with the experience that I have with watching that tape, that's some of the names that are going to be making moves. And of course, I still have to manage that trade. I am looking to, you've got to have a plan. Is that something you're looking to swing or just a day trade? So you kind of plan accordingly, but it is a lot to take on, and especially for somebody who's newer, because they just think that everything comes in is unusual options activity. And unfortunately, I think that's where we were before. But when you look at the environment that we are in now, where you only used to have monthly option expiration, then you went to weekly, and now on some of the major ETFs you got daily every day, and it's really changed the landscape. So when you think about how heavily traded options is, it really does start to have some impact in the overall market conditions.
Yeah, I think maybe we should start talking really quick about how we use it. And because a lot of people hear the term unusual options activity, and it's just like you make a great point. Not everything is necessarily actionable. Sometimes it's just information and so forth. For me, my style is a little bit of IBD, William O'Neill, which is sort of, Investors Business Daily, sort of a growth strategy. at the end of the day, which is really what the strategy is. So I'm looking for growth stocks, there's value stocks and so forth. There's a lot of different strategies, but I'm looking for companies with strong earnings and sales growth, meaning strong fundamentals, and that are pretty much growing 10, 20, 30% or more year over year. And then I want to try to combine that with strong technicals, which is explained in a lot of different books and so forth, where I'd say over the past 5 to 7 years, where I've added a new arsenal, I guess, to my, to everything I'm doing, is unusual option activity, to pay attention to if there is institutional flow or some unusual trades to help complement what I'm doing, to help me gravitate towards some of those stocks or maybe stick with some of those stocks. So that's how I'm using it. I'm not necessarily trading the options. I'm using it to give me, I've always said, the ultimate goal for traders is you want to have conviction. You want to not just say, okay, so-and-so's trading this, so I'm going to jump into it, because there's an expression, borrowed conviction rarely works. You want to have your own conviction, and following that unusual option activity helps me with that conviction.
I agree. I am just a little bit different to where I use what's coming through to kind of create a thesis. I'm gonna walk through a really good example of some current stuff that we have coming through to kind of give you some insight on how my mind kind of goes down that rabbit hole and kind of pieces some things together. 2022 was a tough year to be a swing trader. So I haven't really looked to put on swings, but there has been a shift, especially the beginning of this year. There's money actually being put to work, and that wasn't something that we saw in the last quarter. If they did come in and they were positioning, and I'm looking for those whales, like 4, 5, 6 million in premium, they would be so short dated and didn't keep the position on for very long. And so now we're going into a new quarter, a new year. We're kind of trying to base out here, and I'm finding that there is money being put to work, and with some time, and they're still staying in the positions, so that they're, at this point, until they actually exit, seem to be committed to actually keeping some money and going out to May, June, July leaps, and that's kind of what you want to see, because that's kind of, we didn't have that at the end of the last year, which made it a little bit harder for me. So I am mixed with, now I'm kind of excited to kind of look to put a few more swings, especially when I'm looking at a nice technical setup, a name I like. I don't go as far with the sales and earning ratios as you do. I look more from a technical and match it with the options flow. But I will say that there's been a little shift, and so it's refreshing for me. There's also opportunities that kind of can fit any trading style, but I think most important is that you do know your trading style. There's a lot of people that utilize options flow to scalp around, because as you get some momentum and you start to get a whole bunch of flow coming in at once, like a flurry, you've got that opportunity. So some people use it that way because that's their trading style. Great day trading opportunities if you just kind of want to hold something short term. Maybe there's news coming out. You don't know, but there's several ways to use it. But I think most important, you have to know and have the plan before, and I think that's where some people try to trade options, and there's positioning that's 10 million into crowd out to January 2024, but they're upset because it's red and they're thinking it's supposed to work just like right away. Well, that's not the intention of the person who kind of put that trade on. They're wanting that time. So it's definitely about knowing yourself as a trader.
Yeah, no, that's a very good point. Do you want to jump right in with some examples? Do you want to do a quick market overview? I mean, I'm open to whatever you feel like doing. I mean,
start us off with the market overview, and then I'll kind of go from there. And I'm going to start with an ETF, and then find some individual names around there, and I think it'll correlate well.
Okay. I am sharing a software package called MarketSmith that I use on a lot of my videos. To your point, I always like to take a step back. We'll do a quick market overview with this is a daily chart of the S&P 500. To your point, it was a difficult market, and you don't need to be an expert technician, but I think it's important to just use simple moving averages, 50-day, 200-day. And the black line on this chart is the 200-day. So to your point about why it was a difficult environment, we broke below the 50-day, the red line here in January of last year of 2022. And then for most of the year, every time we rallied up to the 200-day, it was resistance. Paul Tudor Jones, I think he said nothing good happens below the 200-day. So sometimes, you just need to take a step back. I like to use the 50-day for my sort of medium term outlook and the 200-day for longer term outlook. But to your point about why it was a difficult market, you don't really need to obsess over the macro or really dig into a lot of stuff. Just simple. We're below the 200-day. That's a simple red light to be defensive, to be cautious. The market's not healthy. And what coincides with your shift is that you said you started to notice some larger prints that were coming in January, correct? As far as option flow. So what's interesting is we got back above that 200-day, and instead of running up and getting sold into strength, we actually got back above it. And then now, hopefully, it can be support rather than resistance. So as far as the current market, this is a very interesting inflection point because we ran above that 200-day. We started to see some decent options flow. Now we're back down here. Now we start to see and be patient, be open-minded is what I've been telling people, to see if we can find support and the 200-day becomes support, or if this is just, that's the big question. Is this a rally within a bear or possibly a new uptrend, a new bull market? Nobody knows the answer. Everyone has their own opinion, of course, where I like to be open-minded. And I think the market will prove itself one way or the other, depending on over the next few weeks, if we can find that support around that level.
This was something we were talking about on a previous basis, and it was before we started to pull back, that there, even on that run up, we were getting a little extended. And I think we kind of said, there's not a bull or a bear who doesn't want to pull back right now, right? Because I'm like interested to see where we get the reaction. And like you said, prove it.
You were talking about that right around here after we had that strong run to begin the year. Yeah.
Yep. And so I wasn't comfortable buying things right there. I really did kind of want it to breathe a little bit. Sentiment was just kind of really overheated. And I'm really interested right now because this is where we're at. Do we hold these levels? Because like you said, I'll prove it. Let's see what we have. And so I'm starting to kind of pick up on some individual names. And I think that's really this year been more of where it's at, because last year when you had these rejections off the 200 and you had just like these really big deep red days, it was just all red, unless you're in oil and gas and some of the healthcare names. You had pockets of strength, but it seems like you're not seeing as much of the same reaction in some of these individual names, even on days where we're pulling back. So if you're looking at the market and you're seeing lower lows, but you're looking at an individual name making higher lows, higher highs, you've got to where you've got some relative strength there. And I think we're seeing more than that, than what we have, more pockets of that than what we have before. And so that's where I like to be able to have options flow kind of help with some of those, as well as, running some scans and finding those names. So we'll see.
You reminded me really quick, and then you can jump into some names. I pulled up the weekly chart because I do like to keep things simple. And to your point earlier about institutions controlling the markets, I want to pay attention to volume as well. So when we started to get extended, and you mentioned that on one of our spaces, we rose up on some pretty good volume. If there is a silver lining, and I know it sucks for the bulls to see a pullback and no one likes, when the market pulls in, but that's just part of normal price action. If there is a silver lining, we've pulled back the last few weeks on lighter and lighter and lighter volume. So that could be a sign. It could be that all that options flow and all the volume that came in January might want to hold those levels. But again, we'll just have to wait and see. But I always want to be open-minded. I always want to be flexible. It doesn't make any sense to be stubborn and just have your mind fixated on we have to go lower, we have to go higher. Just kind of go with the flow, see what the market's giving us, and adjust your, plan, especially for traders, adjust your plan based on that.
And I think that's what's really difficult, because we've had so many dramatic moves, sharp down, sharp up, sharp down. And what if we just kind of digest this? I mean, I don't think anybody really wanted to see where we just continued straight up, because it doesn't create like a constructive. You want to see this come back in. You want to just kind of digest these moves. And this is, where we're at. So we will see and then react later. I'm not going to try to predict anything. I'm really trying to cancel out the noise and just kind of stay focused. I have a process. I have an edge. The last thing that I want to do is abandon that just because there's constant negative headlines. I'm going to stick with what I know. That's where I'm strongest at, and then go from there.
Yeah. That's a great point as far as after stocks, ETFs, indexes make big moves, it is actually normal to digest. I know so many newer traders, they're like, why can't this go up every day? I want to make money every day. And we all do, but you have to understand that just like after a big Thanksgiving meal, you have to lay down sideways on the couch. At least I do. After the market makes a big move, it's okay to digest. But this is where you pay attention to the clues and what the market's telling us. Are you pulling back constructively? Is it on lighter volume? Is it pulling back to key averages? The stuff you follow, are the flows still coming in? Are they sticking with those positions? Or is it just a violent, sell the rip type of environment? That's where paying attention to price action flows. I like to use moving averages, at least to help give me an idea if the pullback could be normal or not.
Absolutely.
So you have some examples you want to jump into. Go right ahead. You can share your screen, whatever.
I do. Great. Yep. So I like to kind of start top down. And as a flow trader, it is difficult to keep up with SPY, Q, IWM, DI, because you have so much coming in. We have daily expirations now. There is just a lot of 0-day. So that's not always going to be where you're going to look for positioning to kind of be a guiding factor, because you also have to consider the amount of money that will automatically go into your monthly expirations, the third Friday of every month. So it can be a little bit difficult, but what I like to do is go from top, then also look at the ETFs, just like you would do if you were technically scanning what do all of our sectors look like. And so something that caught my attention that came in on Friday, which makes me kind of believe this week, we may hopefully just kind of digest and continue to go sideways. We may have some pullback, but we're setting up with some short-term defensive. This is going to be some activity that I noted in the XLP. That's going to be our consumer staples. So on Friday, you have a larger trade here. This was a straddle. They came in and opened the 317, 67 calls with 6.9 million. So this is a March 17 expiration. There's really not a lot of time to have almost 7 million on this trade. There was also some recent larger dark pool activity in XLP. That's not going to really tell me anything, except it's going to let me know that the institutions are active, with shares. And now I've got some options flow to kind of bounce off of with that. And so when you look at the XLP, you're going to go with your individual name. So you kind of have a technical setup here, possible inverse head and shoulders, resistance above. So something to keep in mind. But now that you've started and you're looking at XLP, of course, by nature, you're going to go and look at the top holdings. And XLP happens to have, higher percentages. It's not as evenly weighted as like XBI. That tends to be, everything gets their fair share of the pie. XLP has, let's see, we've got 14.6% of weighted volume for in PG. And so interestingly enough, after seeing XLP, there was also really short dated. This is going to be a risk reversal that's going to be March 3rd expiration. So that's this upcoming week. And when you think about that, there's not a lot of time for this position. So it'll be a name that I'm watching. They came in and they wrote the 137 puts and open the 140 calls. So what they're doing is writing the puts. That's going to allow them to collect premium to help cover their call side of that position. So it just kind of takes off some of the risk, but it is still a bullish positioning. They don't want it to go any lower than 137, and they've got some upside if we continue to move. So PG seeing some flow that we don't really see shorter dated. I think when we see most of the flow that comes into PG, you're going to be around earnings. So something to keep in mind. Do just want a side note, Costco does have a 9% weighting in the XLP. They do report this week. So not as heavy, but just thought it was interesting from that perspective. And then
so that's cool. So you're looking at the ETF and then looking at the components and seeing if there's flows in the top components of the ETFs.
Exactly. And that's just the way that allows me to kind of put that puzzle together. And I'm not sure that's something that a lot of people look at. You still want to have that process, top and then work your way down. And I'll go through and do that anytime I see flow in any of the sector ETFs, because you may see the positioning there before you even see individual names start to come through. I know we've talked before a few weeks ago in a Spaces about some of the larger put positioning in the oil and gas names. So you had OIH, XOP, and XLE, all of that coming in with June, and there's just millions, and they've been pretty relentless. There's been some shifts and some changes. They're rolling some stuff now, but I wanted to kind of talk with people at that time because I thought that was important because you still had a lot of charts that looked really good in the oil and gas sector. And here you have ETFs, but you didn't see it in the individual names. You didn't see the options flow there yet. They were starting from an ETF, but the ETFs don't just move because they're ETFs. The ETFs moves because they're a basket of stocks. So what I was kind of thinking would happen was start to see the positioning in the individual names, and that's when we'd see more of that move, that downside move. And and we have seen a bit of a breakdown. A lot of the positioning is still there. And it makes sense. If we're going to have some rotation coming off of 2022, you had such a strong outperformance by the oil and gas names, a little profit taking there and being able to put some money to work into some new opportunities as we go into 2023 is just, you'd expect that. And there we're kind of able to see where we've got some sector rotation.
Okay. Okay. I don't know if was there anything you wanted to share, like as far as you don't have to. I didn't know if there was anything on your screen or if not, or
So sorry. Let's see.
maybe you thought you were sharing, but it's okay.
I sure was. Okay, let me
It's
just
okay.
backtrack here. I am so
All right.
sorry.
No, that's okay. You might have hit. I do that all the time. I forget
Yeah,
to hit share. So
yeah.
if you want to
So
quickly review, what you were seeing with the, I love this, the layout of all this. Yeah.
Yep. So I do utilize black box stocks for all of my options flow as well as the dark pool activity, and just kind of wanted to show some of what I had, what came through. And this was actually for XLP end of the day. I am Central Time, but I kind of have where we have the options flow that's come in, and then also some dark pool activity that's more recent, that's larger. You don't typically see XLP, and even here with a 2 million share dark pool print, that's 20% of 30-day average volume. So that's telling right there, that's a huge chunk. And even when you scan and you're looking for things, you're looking for that relative volume. So I feel like I get it and a chance to look at it from this perspective first. And then of course I'm going right to the chart and kind of have a setup here that could be favorable as we go into next week. And then also have the activity in PG, just kind of wanted to show those trades. That was just what I was discussing, the risk reversal. And then sometimes you get just names out of the blue. And this is where I love this part. When you start to see names that just you don't typically see and have done well before. So I've got CTSH. They started to come in and opening here with a little time, not much size, but it's starting a position. This week they came into the 421.70 calls. I am in that. You got 150,000 behind that. And then you had some follow up tack on it. That's what you really want to see, where there's repeat interest, in a name. It's not just one, one player. When you see the repeats, I really like that setup. They're continuing to come in. We still have some time on these 421.67 50s, 616 60s, and they also picked up some leaps, the Jan $70 calls. So starting to see a little interest kind of come through, and also had some larger dark pool activity. This name doesn't see much size. So if you were to look on 223, I'm sure you probably have a pocket pivot there, because you've got 1.48 million shares, which is almost 30% of 30-day average volume. And of course, this is not just taking this information and blindly just jumping into trades. Now I'm going to the chart, and I do like this setup as we pull back, and this blue line is the 200. So think about that. This is just like a beautiful play out of what I want to see. We were a little bit extended. We're coming back in. This is where I want to see this positioning, that they're coming back in for a few names and now coming in with time as we're pulling back. And this is beautiful to me because it's exactly what I wanted to see. We're seeing in a few select names. So stuff I will continue to monitor and keep my eyes out. And it's easy to manage this position. You use the 50-day. So if we cannot hold the 200 and we drop down here, you've got a tighter stop, and you could set yourself up, around the technical breakdown if we can't hold the 50 after breaking the 200.
Yeah, ideally it's nice to see like the 10 above the 20, above the 50 and 200, but because we're coming out of this sort of deeper correction or bear market, and I'm open-minded, we could still be in it, but in an ideal power trend or uptrend, you have all the averages, successively above each other. But now, because of where we're coming off of this market, you're starting to see it's a great point you make. You at least have a stop because you're seeing a confluence of support levels. So that I'm looking at the chart now, that 200 days right above that 50-day. So hopefully it can hold, one of those things. And you also could bring up a great point of ways I use unusual option activity is if I'm noticing consistent flow into something over, let's say 2 or 3 trades over a week, or 3 or 4 trades over 3 or 4 weeks, where you're seeing big blocks of calls or puts or bull risk reversals or whatever the trade may be. And it's not just one trade, it's consistency over a few weeks. Or it might be a big player writing puts that they're willing to buy the stock below. And when it gets closer to expiration, the regular cycle expiration, third Friday in every month, sometimes they will roll that trade. So they're still, in other words, they're maintaining their bullish position where they'll say, I'm a willing buyer in January of these puts, and then I'll roll it to February. I'm a willing buyer if it comes down in February, they'll roll it to March. So that consistency is what I'm looking for in the flow with options.
Absolutely agree. And then sometimes you just don't, you don't see certain names. This AI trend. I think you had played AI and you had seen some of that activity. Once you start to kind of get when something like that kind of happens, then you start seeing all the names. The first thing you're doing is checking and seeing if anything has AI in their description. And then all of a sudden, randomly, there's all these new names. I had no idea what they were. SOUN. All of a sudden, it's getting tattooed with a whole bunch of just call. And so you're just like, you could start to really see where these stocks are going to continue to make that move, because now there's interest from also, an options perspective.
Yeah, that's a great example. I'll pull that up because I can pull up a few examples recently and one that I just looked at Friday. So let me go back to Market Smith to share this. And this was AI, C3 AI. It wasn't, I'll be honest, it wasn't on my list. I do love software in general because the profit margins in software fundamentally, Microsoft's just been a winner over the several, many years. So I just like in general the software business. So this is an example of one that was not on my list. And then on January 17th, which I'll have to pull out the crosshairs right about here, January 17th. So it was right around $14. It started to look like it could be basing out and bottoming out here. And it was at $14, and a huge buyer came in for the January 7.5 calls for almost $7. It was 2,500. To your point, it's unusual because it's a name that doesn't really trade much. And you started to hear more buzz early in the year about artificial intelligence and AI. And then it flowed. It started to move out of this range. And then there's some more flow that started to come in with some more February calls, some more July calls, and some more larger dated January calls that really started from, this is what I mean, from January 17th. It came in on the 27th, came in on the 23rd, 27th, and 31st. So it was consistent flows that came in all the way, and that helped it flow all the way out there. So that's an example of, I use the options it's normally something I wouldn't trade, but it was unusual and I used it to take a position in the shares, and then I just managed my risk around that. There was a couple others. I don't know if you have any comments before I go to the next one.
Nope. I just agree. When you see those names, and that's definitely not one that you would think you'd be looking at, but once you kind of start to see and you're pulling in different probabilities, then it's of interest.
Yeah. AYX was another one. Same thing around that time. I'm trying to find the exact late December and early January. This is again on the weekly chart. It's a software name that's been beaten down, but as a lot of software names with interest rates going higher, the higher valuation names come in a little bit lower, but eventually cream rises to the top, so to speak. In other words, some software names are going to be dead money for a while. Some will base out for a while. Some will start to have some decent earnings, and that's eventually what will move the stock higher. But same thing. It was, at least you have a consolidation here in late December, early January, and they just started to come in with February 65s, some other puts were written, and it was all throughout May 65s. It came in at the end of December. It was all throughout the end of December, early January. And I said, you know what? I like software. This was an old leader. the flow started to come in, and I ended up taking a position. And then by the time their earnings were reported, when a lot of people ask that question, I'm sure you get this a lot, what do you do over earnings? At least with the shares, I had a cushion of about $8 or $10 where I could say, okay, the flow came in. Then the flow comes in. I think they were supposed to do 50 something cents and they did 84 cents, and they did a huge jump in revenues as well. So whether somebody knew something or not, I really don't care. It's just the flow is consistent and unusual, and that helped me gravitate towards some shares in this one.
Very nice setup, and I absolutely agree. I will say, from an options only perspective, you just have so much risk if you're only holding options through an event. And so you had a cushion with shares. That's one way to definitely do it. And I think as you go into an ER event, and I add caution here because some people will flow in some names around ER can be so sticky. It's puts one day, calls, puts, like you look and it's like,
Yeah.
I caution here because sometimes what people do is they look for the bias and try to find it. They look, oh, there's calls, but they completely miss that they also came in with puts, because as you go into an ER event, you're going to have houses start to put on protection, especially if they have, a larger holding. It's not all that somebody knows something, and most people don't realize that, and they're looking, and when I say this, I'm talking about the people that are like, come in the morning of ER and they're like, okay, what came through today? Not thinking, you don't think people have been doing this for 2 weeks, knowing that ER is coming up and trying to add protection or create, spreads around their position. You're looking at one day, and I think most people go and look and don't see the rest. So just when you have a plan, and see, like I'm holding a few positions that like toast, I'm a toast, I've got leaps there. I want to hold through ERs because I think there's a growth story there. It's not right now today, and that's not when I'm looking, but that's like my plan when I came in. It's completely different to have the plan with what you're looking to do, opposed to just coming in and trying to roll the dice and find some weekly options just based off of flow. That's not going to work very well.
You make a great point about earnings, because in the example of AYX or AI, maybe they had flow before they knew the earnings were going to be good, or before they knew some buyers were going to come in. So with earnings, I like to see the flow a few weeks, 2, 3, 4 weeks before the earnings date. How do you handle, it's such a great point about the day of earnings or right around earnings. You don't know if a larger player is buying puts as a hedge. So when you see that put trade, people are probably telling you, well, there's puts, but there's also calls. How do you explain or shut out that noise or interpret that noise when, to your point, it's very messy around earnings?
Most of what I prefer to do when I start to see the positioning, like PanW was one prior to, and that was a software name that really, when you talk about cream of the crop and rise and everything coming through, that just like check, like everything, I like the ER run-ups ahead of time. So when you start to see some of that positioning come in, and that there's a larger size, you can certainly take the run up. I'm usually out by earnings. I just really, I've done that before, and it's hasn't worked favorably for me. So I prefer just to take it off. Now, if I'm with shares, I'm something different because I can manage that risk a little bit better, or it just, as long as you have your plan ahead of time, that's what is most important. But I prefer to try to catch some of that as an ER run up, maybe take some off, carry less, size, depending on how much time you have on that position. But I'm not coming in Wednesday trying to pick up Fridays for NVIDIA and paying that premium, because Ivy Crush,
yeah, that's
bad.
a losing game.
It's a losing game.
We'll get into that in a second, but you did make this point a couple times on some spaces we did in January about the constant in PA&W Palo Alto, which is one of the leaders in software security. You mentioned all the put writing that kept coming in, that flow prior to the earnings. So this is an example of, they kind of did their positioning prior to the earnings, not like a bunch of crackheads the day of trying to gamble. So
correct.
Not to say institutions can't be crackheads, but I'm just saying they usually tend to plan a little bit better.
Yeah, no, I think that's a really good point. I'm glad you brought that up, because it can get sticky, and I think people will utilize it for the wrong reasons ahead of that, and that's maybe where they haven't had success, and then they say, oh, options don't work, but they're just kind of need maybe to spend a little more time learning about options first, and don't set yourself up with the riskiest trades out there like YOLOs. that take
One other one I did want to bring up, because this is more, as far as, just sort of, instead of someone saying, okay, great, you bring up the ones that worked from the past. This is an example of real time, how I try to process information. So 2 Fridays ago, before the long weekend, Bloomberg reported that Tesla was in talks to potentially be buying out Sigma Lithium Corp. According to Bloomberg, the story was one of multiple mining options Tesla's exploring as it mulls its own refining for lithium, because clearly it's a big deal for their batteries and so forth, and parts and all that. But then what was interesting is Friday, and I even tweeted this out, is Friday, a 5,000, a large call spread came in on Friday. And I go to the 5-minute. This is the beginning of the day. Friday came in right around here. And it was, the stocks at about 32, 33, and there were the April 40, 50 call spreads. 5,000 of them were traded for $1.70. So this is an example of, it's unusual because it's a Friday, and you've made this point to me before. Sometimes Friday things get slow before the weekend, and it was a difficult day for the market with the inflation report weighing on the markets. But pretty much, whatever it was, like, an hour or so into the day, a big trade came in, and I took a position in the shares. Not to say they're going to get bought out. Bloomberg already reported they're potentially in talks, but I just found it interesting because you have a decent technical base, a large trade, and at least you have a defined range where you can stop yourself out. So I bought some shares, full disclosure. It's not investment advice, but I'm just trying to show examples of, it was unusual to me. I like the story. The technicals are decent. So I bought a few shares to see how this plays out, and I'll be managing my risk around this as well.
Love it. I like that name.
You brought up a point about earnings. Any sort of, tips, advice? I know a lot of newer traders, you brought up the great point about IV Crush, about implied volatility, where they'll just say, okay, NVIDIA has earnings, Apple has earnings, Amazon has earnings. I just want to buy calls. I know it's going to be good. And a lot of times that premium is already priced in for a 5, 10, 8% move, depending on the straddle. You want anything, you sort of, for the people who ask you trading things, any sort of advice, tips, do's, don'ts around earnings?
I just don't do it, because I think if you even look at some of these earnings,
You're like, just don't do it.
Just
Stop
just
gambling.
don't. Because it's like, when you look at a name like NVIDIA, and you're thinking it's going to go higher or lower, and that, like you said, it's priced in, those contracts are expensive. Even if you get the move you want, that will kill the contract pricing. You're not getting that premium paid, because once it's out, the event's over. It's done. The pricing is not the same, and especially if you're working with like really short dated. So I think there's better ways to, position yourself in some more solid names. Take that approach, kind of just preserve that capital. That's really what all of this is about. And I think, unfortunately, when we had so many new traders come in, some of them not even ever trading shares, and that just blows my mind that everybody's going straight into options, because it's like a way to kind of have a little bit of leverage to be able to play a Tesla or NVIDIA, Netflix. But that shouldn't be your goal, because your goal should be to stay in this game. And I think that's where a lot of people are no longer with us, because they just took every high risk chance instead of really trying to give themselves a chance. And that's unfortunate. It has been a tough market. So I think that's important for anybody who's still here, that's still trying to, push along. Take your time, be patient with yourself, continue that learning process, because it just never stops. But I think that's one of the things that we all love about the market as well.
Yeah, it's really interesting, because so many newer traders, there's that enticement, and that sort of, it's so fascinating with options to put 50 cents or $1 into something and turn it into $4, $5, $20, whatever. There's that, that fascination's there. But And then when you see one happen, you think it's a repeatable process. But I mean, my thing I've learned with options, because it's always the decaying asset where time is not on your side. Give yourself a little bit more time, even though people are really, there's a lot of zero DTE people trading stuff that expires. Like they'll buy something at 11 Eastern that expires at 2 o'clock Eastern, and just like it just blows up. Like I'm just a fan of giving yourself more time, because unless you literally get the timing right, it's most likely going to expire worthless.
And just because you utilize options flow, and I'm finding a lot of people do what you do, and they're trading commons off of that. So they like to know that there's some interest, but they know that they can manage the position better with commons. So that's, that's a great approach. And especially if I would like to see more newer people starting off that way, just because you're giving yourself a better chance to kind of be able to learn to kind of put a plan in place, know where you're going to stop yourself out, look for those solid breakouts, from bases and just the technical setup. And you're able to kind of marry it all together. So really would like to see more people doing commons instead of just going straight to options. I think we'd have
that's a great point, because like with SGML, for example, I bought the common shares, and let's say I'm in at 33, and let's say some news comes out that Tesla, or they're no longer for sale, and it drops 10%. I have a position where if the news comes out unfavorably, it's still a great company, still expected to earn a lot of money. But with the shares, I have a position where if it drops 10% on that news, I can live with that. Where if you buy the calls and that news comes out, you've lost everything. Now, if you've put aside enough where you're okay if that option goes to zero, that's fine. But that's such a very important point, that it's a lot easier to control risk around common shares than with the options.
Absolutely. Absolutely. And I think that's kind of, what you and I are kind of joining forces for, is just to kind of collectively take a lot of this information, process it, and help everyone find calmness in chaos. It is very noisy out there. And so just want to make sure you're approaching everything with a level head. That's going to be extremely important. It has been extremely volatile, and I think we'll continue to see that this year, but just take a deep breath, take a step back, and being calm-minded, make sure that you stay with us and that we continue to all grow and prosper together.
Yeah, no, I appreciate that. I just realized we can geek out and talk about this stuff for a while, but we probably should wrap up this first pilot episode. I appreciate you hanging out, agreeing to do this. You had a lot of insight and knowledge where, like you said, we're looking at things differently, and you can explain things better than I can because you're following this all day. And that's really what we're trying to help people do, is take a step back. And we live in such an impatient world. I always joke, I want to do 10 sit-ups and have washboard abs. Like, it doesn't work that way. We all want to make a fortune right away. But if you can just learn to take a step back once in a while and realize it's not just cliche, it's the truth. It's a marathon, not a sprint. And if we can help to provide some of that calmness in your trading and investing, then that's mission accomplished.
Absolutely. Absolutely.
Cool. Any closing words or any final thoughts?
Nope. I think
besides subscribe below.
Yeah, exactly. I think it's important. I just want to circle back to, this is an area where we are really, it's a prove it. So just kind of knowing, I know people are trying to, they're expecting like this violent, down move upward. We could just go sideways. So you don't want to kind of just sit with a bias that's going to make it really challenging. This is an area where hopefully we can sit and digest, and just kind of respect the fact that technically we're holding right here until we don't. So that's just keeping an open mind is going to be absolutely imperative.
Awesome. Well, thank you, everyone. Thanks for tuning in. Please subscribe. We hope to put out some more videos soon, and we'll see you next time on Calmness in Chaos.